The dollar just crashed to a 4-year low, and President Trump's response?
No, dollar's doing great.
That's not denial, that's the plan. His comments fueled the dollar's deepest drop since his tariff rollout. Trump wants a weaker dollar. But why? Well, it makes US exports cheaper and foreign goods more expensive. That helps manufacturing and boosts American sales abroad. And he's got the numbers on his side. The dollar's overvalued against nearly every major currency. The yen and the euro are particularly low levels, giving foreign exporters an edge. But a weaker dollar cuts both ways. It might help exports, but it scares off investors. Trump's attacks on the Federal Reserve and threats to allies are cracking confidence. When markets sense instability, money moves. Then there's the $40 trillion US debt. A falling dollar risks higher inflation and borrowing costs, making that mountain of debt even harder to manage. Some analysts say the dollar's decline is just beginning, and Trump, he's not standing in its way.
It's an American financial crisis, and the world is now pulling the rug out from under the U.S. The dollar is going to collapse. The dollar is going to be replaced by gold. Central banks are buying gold to back up their currencies. True. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis, again, that will make the 2008 financial crisis look like a Sunday school picnic. The biggest difference between the crisis that we're about to have and the one we had back then is this one is all in America. It's not going to be exported to the rest of the world. It's not a global financial crisis. It's an American financial crisis.
Since April, the dollar is dropping, and President Donald Trump is signaling that he's comfortable with it. The dollar dropped as much as 1.2% on Tuesday, its biggest decline since April last year. What spurred this? Trump's reply when he was asked if he was worried about the currency's drop.
Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
The dollar weakened against every major currency in the world. In Asia, the Japanese yen to the Korean won will be in focus as investors seized on his comments as another reason to turbocharge selling of the US currency. Now remember, the dollar has been falling for a while. Trump sent markets and the dollar into a tailspin last year during his tariff rollout. Unpredictable US policy, including Trump's threats to take over Greenland, along with pressure on the Federal Reserve, have all made investors more and more wary on the dollar. Why is this important? The dollar dominates trade. It's on nearly 90% of all foreign exchange transactions every single day, and it's the backbone of global finance. A sudden massive fall in the dollar could trigger economic disruption, make countries less competitive on exports, and ramp up volatility across everything from stocks to bonds to credit. So as the dollar continues to fall, keep an eye also on who the biggest winners are.
Listen to this. I'm a currency strategist at Treasury. Yesterday, the dollar hit a 4-year low. Worst single day since April, down 9% for the year. Weakest since 2022. The president said, I think it's great. He's right. It is great for us. There's a document. You probably haven't read it. It's called A User's Guide to Restructuring the Global Trading System. We call it the Mar-a-Lago Accord. It was written by the guy who now sits on the Federal Reserve. Before that, he ran the Council of Economic Advisors. The document says to weaken the dollar on purpose. As policy, we did. The thesis is simple. A strong dollar makes American exports expensive. A weak dollar makes them cheap. If we want factories, we need a cheap currency. If we need a cheap currency, we need to devalue. If we need to devalue, we need to do it slowly. So nobody notices until they do. Yesterday, they noticed. The Swiss franc hit 15-year highs, gold hit all-time highs, the yen strengthened, the euro strengthened, everything strengthened except us. That's the plan. People ask if I'm worried about the decline, about what it means. I say I'm constructive. Constructive means the plan is working. Here's what nobody tells you about currencies. They're not markets, they're policies. Central banks don't observe exchange rates, they create them. The rate check we did on January 23rd, that wasn't observation, that was intervention. We called the trading desks, we asked for prices, the market understood, the dollar dropped, mission accomplished. The secretary wants a weaker dollar. The president wants a weaker dollar. The accord says weaker dollar. Everyone agrees except the people holding dollars. But they don't vote on currency policy. They just experience it. Let me tell you what a weaker dollar means for you. Everything imported costs more. Your purchasing power declines. Your savings buy less. Your vacation is more expensive. Your electronics costs more. Your gas costs more. Your groceries cost more. That's not inflation. That's competitiveness. In 1971, Nixon ended the gold standard. He said it was temporary. 55 years ago, still temporary. Back then, $1 bought $1 worth of goods. Today, that same dollar buys 12.5 cents worth. We devalued by 87.5% over 55 years at 3.85% per year, compounding. 700% cumulative inflation. That's not a bug, that's a feature. Debt becomes cheaper to repay. Wages lag behind prices. Assets appreciate. If you own things, you win. If you earn things, you lose. That's monetary policy. The national debt is 100% of GDP. It'll be 134% by 2035. You know how you pay down 134% of GDP in debt? You don't. You inflate it away. You devalue the currency it's denominated in. You make the number smaller by making the unit smaller. That's not default. That's monetary flexibility. Consumer confidence just hit 2014 lows. People feel something is wrong. They can't articulate it. They just know things cost more. They know their paycheck goes less far. They know something broke. Nothing broke. This is the machine working. 89% of economists agree. If the Fed loses independence, risk premiums go up. Treasury yields spike. Borrowing costs explode. Growth slows. So we're careful. We don't say we're taking independence. We say we're rethinking coordination. Same outcome, different press release. The president said he could move the dollar like a yo-yo, up or down. He's not wrong. Currency is a policy lever. We pull it, you feel it. Sweden's pension funds are selling treasuries. Denmark's pension funds are selling treasuries. China is selling treasuries. They're buying gold instead. Smart. They read the accord. The dollar is the world's reserve currency, for now. The accord says we can keep that status, while also devaluing. Having it both ways, that's the theory. We'll see about the practice. Gold at $5,000, silver at $110, Bitcoin at whatever Bitcoin is at. These aren't bubbles. These are exit signs. People are leaving the dollar, not because they hate America, because they read the policy. I'm updating my LinkedIn. Led currency transformation at Treasury. Transformation is accurate. We transformed the dollar from strong to competitive. The president says the dollar is doing great. He means it. It's doing exactly what we want.